public revenue, which talks about the revenue collected from various sources such as tax revenue and non-tax revenue. And we have also discussed about the meaning of public revenue. It's an income generated from the various revenue sources. And what are those sources of public revenue? And especially in India, we have tax revenue and non-tax revenue. Under the tax revenue, what are the different heads of tax revenue? We'll collect for the welfare of the people, because we need to collect the taxes to use for the welfare schemes and public projects. In that process, we have discussed about what is union excise duties. The duties or the duties has been imposed for the commodities which has been produced other than liquors and narcotic drugs, that has been collected by the central government. The union excise duties has been collected by the central government. Then certain commodities which is collected by the state governments. And the central government is also having the eligibility or liability to collect the customs duties for various imports and exports of goods and services from exports from India, and also the imports from various countries to the India. So the custom duties also is important phenomenon for generating a good amount of revenue for the government of India. Then we have started the other kind of taxes, especially the sources of revenue, and that main one is the income tax. So the income tax is at present the one of the important source of revenue for the Union Government of India. It is revealed on the incomes of individuals, into undivided families and unregistered firms. As I told, the income tax is levied on individuals, those who are earning the income, either the income from salaries, income from profit of doing any kind of small economic activities or big economic activities. The individuals who's earning income from agriculture, individual who's earning income from windfall gains like lottery systems and all, and the individuals' incomes earned through profit gained from the bonds, dividends, then share market, wherever and all the income is sourced, that will be taxed under the income tax law. And even for gift also, gift taxes will be there, and that's we are going to discuss anyway. And the Hindu undivided families, that those who are constituting a small firm with the partners of not outsiders, only Hindu, only the family members, and those businesses are called as family businesses. In that family business also, the income which is generated from that particular family will be charged as an income tax. And unregistered firms, those are Indo undivided family firms are registered firms, and those firms are unregistered and operating for less than 10 employees. For example, sir, I am operating one small bag manufacturing company. I am operating one small tailoring unit, but I'm not having so much of employees. Only some 4-5 employees are working in that small unit. But I'm generating some 2 lakhs per, some 10 lakhs per annum. Then automatically it is also, even if it is unregistered firms, they also be liable to pay taxes, so that they will also be taxed. These are all the sources of income tax revenue collected from the people, individuals, or it may be firms or unregistered firms. Then we have corporate tax, corporation tax, the income tax on the net profits of joint companies, or maybe joint companies or the sole proprietorship. The taxes will be levied for those kind of companies will be called as corporation tax or corporate income tax, the net profit. For example, I can also share one example. Suppose Tata Consultancy Services is there. So TCS is one of the biggest IT company. So that IT company is having the status of corporate company in India. So suppose they are earning the profit of 1,000 crores per year, they have to pay 30% of the profit, net profit, not on the whole profit, from the net profit after deduction of depreciation, after the deduction of the expenses incurred for various the company activities, cost on salaries, cost everything, after deduction of everything, then the net profit will be calculated for paying the taxes. Then that is corporation tax on companies, especially with joint stock companies and other companies listed in the registration. Then wealth tax. It is an annual tax on the net value of the wealth of an individuals or families. It is called as wealth tax. Sir, I am not getting any income from my wealth. For example, one house is there. That house, I am not getting any rent. I am not getting any profit from that house. The value of the particular property is some 100 crores, but I'm not getting any revenue. But even though if you are not getting the revenue, by holding that particular value of wealth, even if it is some 10 lakhs worth wealth also, we have to liable to pay taxes under the Wealth Tax Act. So wealth tax has been collected on the net value of the wealth, maybe, and that may be increased by year and year. For example, same amount of wealth. For example, sir, I have one building in Bangalore. So in 2020, in 2010, it is the wealth tax is charged some 1 lakh rupees. Now I have to pay wealth tax of some 10 lakh rupees for that value of the property. Yes, of course, it is a progressive tax. Wealth tax is a progressive tax because every year depends upon the real estate value. The value of your property is also increasing. Depends upon the inflation, your value of the property is also keep on increasing. So that automatically the estimation will be calculated on the basis of the current market value, so that the wealth tax will also increase. Who and all has to pay the wealth taxes? The owners of the wealth or owners of that asset has to pay the taxes. The next one is the gift tax. Income, if I earn, then I have to bear taxes on income. And corporate profit, if I receive from my corporate business, that we have to pay interest. Pay taxes. Then I generated some wealth. I constructed some building. I created some asset. For that also I have to pay taxes. Yes, of course. Even if you get any free gifts, it is a tax on gifts of property by an individual in his lifetime to future successors. For example, suppose if you are getting some gift, if you take an example of this, cricketers are getting a car as a gift when they are playing the cricket. Man of the match, they'll be getting one car. And then the best cricketer, they will also get one bike or car. For that purpose also, after receiving that car, that holder of the car has to bear some amount of taxes to be paid as a gift tax. That is around some 30% we have to pay taxes for the gift taxes. And suppose, sir, I am participating in one television channel, one competition was conducted. I have participated there. I got some 5 lakh rupees as gift. 30% you have to pay taxes. 30 or 40% you have to pay the taxes. And after the deduction, if it is a cash price, then they will deduct the taxes and the remaining only they will pay. But if you say the board, it will be written as 5 lakhs. But after the tax only they will pay. Because all the gift, even lottery system, if you are getting the windfall gains from lottery, you have been awarded the lottery prize win of the cash of rupees 1 crore. Yes, some 40% you have to pay gift taxes to the government, because it is a money which is arrived at free of cost or with less amount of cost of investing the lottery value, and the gift tax to be paid. And capital gains, the gains which we received from the capital, for example, capital in the sense, suppose if you are buying the some bonds, sir, share in the share market, you are buying shares. At the time of 10 rupees, you bought the shares. When you are holding it for 1 year, after 1 year, the value of the share price has become 200 rupees per share. So 190 rupees, you will get the profit of your investment of rupees 10 per share. Then you have to pay the taxes for the amount of profit you generated from capital gains. It is called as capital gain taxes. It is applicable to capital gains resulting from the sale, exchange, or transfer of capital assets. Whatever the capital assets, for example, sir, I'm not selling my capital assets, I'm just exchanging. Yes, while you're exchanging also you have to pay the capital gain taxes. Sir, I'm transferring my capital assets, my name into my brother name or my sister name or to my spouse name. That time also we need to make the capital gain tax, because whenever you are transferring or selling, you are getting the profit out of that particular capital. Then we have to make the necessary percentage of taxes as capital gains taxes, because you are gaining something from that taxes. I mean, from the selling of that capital, either it may be shares, bond, debentures, whatever the kind of either promissory notes, everything we have to make an appropriate taxes. Then hotel expenditure tax. Recently, a new tax has been levied on those who patronize high-class hotels. For example, so many people, the upper class people, they used to have the costliest hotel. So in the new tax regime, the expenses made on hotels, that has been levied some percentage of the taxes while you are occupying a particular high class hotels by paying some 1 lakh per day. Hotels are available, 5-star, 7-star hotels. So when you are making expenditure on the accommodation of such hotels, we have to pay hotel expenditure taxes, because as more amount of money has been used for the to reduce the taxes. For example, why that hotel expenditure taxes has came? Suppose if students, you are following with me?
Yes, sir.
Yes. So why that hotel expenditure taxes has arrived recently? Suppose if a corporate company, as I told, the corporation tax is levied on net profit of the company. For example, if 100 crores is the net profit, then what they will do, the entrepreneurs or the owners of that particular organization, they will further, they want to reduce the net profit. So that what they will do, they will make an expenses not for the company, and they will do the expenses on staying in higher end hotels, like stay on 7-star hotels. So that stay on 7-star hotels, maybe they will charge some 1 lakh per day. So so in my company, some 10 people have, or 20 people have stayed in a hotel for facilitating our company management, or facilitating our company's sales, so that they have stayed in a particular 7-star hotel, and they will get the bills also from the 7-star hotel, so that they will show the expenses on spending so much of money on hotel expenditure, so that their net profit of the corporation tax will reduce. So they can able to escape, not it is a kind of not exploiting, but they can able to avoid the higher amount of corporation taxes. so that they can able to show the expenses in hotel expenditure. When they deduct from net profit, further amount of net profit will reduce, so that the percentage of paying the taxes on corporate taxes, corporate income taxes will reduce, so that they will show in such case. So what the Union Government of India has decided, okay, you are showing such kind of amount of total expenditure on a hotel, then we will tax the, whenever you are making the hotel expenditure, from there only we'll charge the taxes on hotel expenditure taxes. Suppose if you are saying 1 lakh rupees, you are paying the hotel amount for stay, then from there only 30% you have to make additional taxes. For example, in hotel itself, they will write 1 lakh rupees is the stay charges plus 30% is the tax. 1,30,000 you have to pay. The hotel, they will take 1 lakh, 30,000 has to be immediately paid to the government under the hotel expenditure tax. So we will also get the direct payment of taxes from the hotel itself. Then next one is tax on foreign travel. So that is also another escaping way of, or avoiding way of taxes from the direct income taxes, either income tax or corporation income tax. We have the provision of showing the travel expenditure on deduction of income tax. Under the 80C series, we have the provision for showing the travel expenses on foreign travel. So what the government has decided now, whenever you are making the travel, another new kind of tax levied on foreign travel to conserve the foreign exchange as well as the raise revenue. So whenever you are going for travel, so that we have to pay some amount of taxes to the government, especially the central government of India, so that we can able to reduce the tax avoidees on their income taxes. And before they are paying the income taxes, we can collect the taxes on foreign travel expenditure. So almost all the ways their plans to whatever we are also planning, the government also is planning, and they are executing the certain types of taxes on individuals and companies. So these are all the various different sources of collecting the revenue by the central government, and we have the other revenues, other sources of revenue as well. Up to this, if you have any questions, you can ask me before we are moving into the next one. Any questions, students?
No, sir.
Okay, fine. So next we'll move on to the what is taxes and different types of taxes. That is with respect to the sources of revenue, where the revenue we can generate by the central government of India. Now we are going to check what is taxes, then what are the different types of taxes, as we discussed in the earlier class also, the direct and indirect taxes. We'll brush up those introductory level. Then we'll move on to the different types of direct and indirect taxes. First one is the Joel is there. Joel. Sanjay.
Yes, sir.
Sanjay, you please tell Joel to call me.
Yes, sir. Sure. After the class, sir.
Yeah, after the class, whenever he is free.
Okay. Okay.
Thank you. So what is taxes? So a tax is a compulsory payment, as I told in the last class. Even the Dalton has presented one definition on taxes. And Musgrave is another important fiscal economist. Musgrave, he also has given the similar definition. So a tax is a compulsory payment levied by the government authorities on individuals or firms or companies to meet the expenditure of the government. And there is no direct benefit or return out of it. This is the definition of taxes. What is tax? So tax is a compulsory payment levied by the government authorities without any direct benefit. What are the different types of taxes we have? We have two different broad categories of taxes. One is direct tax, another one is indirect taxes. Under the direct tax, what do you mean by direct taxes? Direct taxes are one type of taxes an individual pays that are paid directly or straight away to the government, such as the income tax, then poll tax, then land tax, then the personal property tax. The income is generated from various properties. Directly we can pay the taxes. And the taxes on capitation, that is called as the poll tax. That is also whenever we are making the capitation, then we have to make that particular tax. Then for example, if you are paying capitation to the public, political parties, that we need to take a poll tax. Then when we are making any kind of donation or capitation to some of the education institutions or government, then we need to make the poll tax. And land tax, that is also a direct tax. We are not going to pay through indirect mode. We have to make the payment directly to the government. But land tax is levied by the respective state government. What is the size of the land? The tax has been collected from the respective owners of the land by this respective state government. And personal property tax, whatever we have the personal properties like houses, flats, then other properties, wherever we have the shares on certain properties, that we need to make the taxes. So such direct taxes are computed based on the ability of the taxpayer to pay. So it is already clear. What is clear? Suppose if it is an income tax, it is be charged on the basis of the income of the individual. So ability depends upon the ability of the taxpayer. Sir, I am getting only 500 rupees per day, monthly 15,000 rupees I am getting salary. How I can pay taxes? You don't want to pay taxes. If somebody is getting 1 lakh rupees or yearly, when they are crossing 5 lakh rupees, 2 lakhs 50,000 rupees, then they have to make a payment of only 5% of their income tax. So the direct taxes, all the direct taxes, it purely depends upon the ability of the taxpayer. But whereas indirect taxes, that is the important difference between the direct taxes and indirect taxes. Indirect taxes, it is not depends upon the ability of the taxpayers. For example, sir, when I am buying one biscuit pocket, I have to pay some 10 rupees, 50 rupees is the biscuit pocket, 2 rupees I have to pay taxes. That is also having the ability, because you have the ability to buy the commodity, then you have to pay taxes. But it is not like an income tax, but income tax, they have given us some slab. When they are crossing that slab only, the income will be charged. But in indirect taxes, sir, I am getting only 500 rupees. For buying that 50 rupees biscuit pocket, I also have to pay 2 rupees as tax. And somebody who is getting 1 lakh rupees per month and crossing 10 lakh rupees per annum, when he or she buying that same biscuit packet, they are also paying only 2 rupees as tax. So there it is differs, but here depends upon the ability, they can pay, they have to pay the taxes. And which means that the higher their capability, because in direct taxes, when they are moving higher and higher of income, their tax rates also will proportionately will increase. And the lower the income, proportionately their tax level also will decrease. But whereas indirect taxes, yes, they are having the ability to buy, but some people having more ability, more capability to pay indirect taxes, but they will be charged equally. That is one difference between the direct and indirect taxes. If you take an example of in the case of income taxation, an individual who earns more pays higher taxes. It is computed as percentage of the total income. And then if it is a 10%, 5% for 2,50,000, when they're moving for 5 lakhs, then it will be 10%. When they're going for next slab of more than 10 lakhs, they'll move for 30%. Then when they are going for more than 15 lakhs, then they'll go for another slab. Like that, the slab will be more, and the percentage also, for example, 30%. 30% means for those who are earning 20 lakhs per annum, they'll pay 30 lakhs. Those who are getting 50 lakhs per annum, they will also pay 30 lakhs. But if you see the 30 lakhs for 50 lakhs, 30% for 50 lakhs, it will be more higher. So that the taxes will be proportionately will increase as your income increases. So that it is purely depends upon the capacity or capability of the taxpayers. It is purely depends upon their income level. Is it clear?
Yes, sir.
Students, it is clear what is direct tax?
Yes, sir.
Okay. Then we'll move on to the various types of direct taxes. The first type we have already seen, the income tax. Then second one is transfer taxes. Then entitlement taxes. Then we have property tax. Then we have capital gains tax. These are all the direct taxes. So in this first one, we are going to do, we already discussed what is income tax. So it is based on one individual income. A certain percentage is taken from worker's salary or staff salary, depending on how much he or she earns. The good things is the of the government is also keen on listening credits and deductions that help lowers one's tax liabilities. So the income tax, we will just discuss elaborately what is income tax and what is the crux of the income tax. When individual is earning certain amount of limit of income, for example, it has to be calculated and estimated and registered under the Salary Act. If the salary is recorded by an recorded institution or recorded companies or recorded registered firms, they have to show how much the salary they are providing for their staffs to the government. While they are showing the salary structure to the government will come to know how much they are earning. For example, the income tax is the direct taxes has been levied by the government to the taxpayers directly. While they are obtaining the salary, a certain amount of slabs has been collected as income tax from the individual income earners. If we take an example of one person is earning 2,50,000 per annum. If up to 2,50,000 under the Constitution of the Income Tax Act, the present scenario, there is no tax to be levied on that particular person up to 2,50,000. When they are moving above the 2,50,000 rupees, they have to pay 5% of the tax. Then, sir, I'm earning some 30 lakhs rupees per annum. Is it only 5% I have to pay? No, some slab is there. So first slab is considered as 2,50,000 rupees slab. Up to that, there is no tax. Some 2,50,000 to 5 lakhs rupees per annum, they have to liable to pay the taxes of 5%. And after the 5 lakhs, when they are exceeding above 5 lakhs rupees per annum, then the individual has to pay percentage of their income. And if it is going above 10 lakh rupees, I think above 15 lakh rupees, then they have to pay 30% as income tax. So it is purely depends upon higher the income and higher the taxes. Now, the government is also providing some options, some credits to the deduction of this income tax. Suppose if an individual is earning 10 lakh rupees per annum, they are liable to pay 10% of the income tax. That means 1 lakh rupees they have to pay income tax. Suppose if they want to reduce the tax rates, they could not able to reduce, but they can show the tax deductions. Suppose if the individual having some deduction under the Income Tax Act 80cc is there. Under the 80cc, A, B, C, D, E, F, G, like that, various sections are there. Under these various sections, they can show the, suppose if you are paying, if that particular person is paying public provident fund contribution. Suppose if you are having the fixed deposit for the 5 years lock-in period. Suppose if they are having some amount of money paid for life insurance premium, some amount of money has been paid for the health insurance premium. These are all the amount. Suppose if it is all comes around 1,50,000 rupees, up to 1,50,000 rupees, they can able to save the income tax deduction. That means up to 1,50,000 rupees that they can directly deduct from their salary. Salary means their salary they won't deduct. Suppose I am getting 10 lakh rupees means 1,50,000 rupees they will remove under the taxation. So remaining 8,50,000 rupees only they will calculate 10% of the income tax, irrespective of I am having the other expenses. So 1,50,000 rupees I can show for tax exemption. So remaining 8,50,000 rupees, 85,000 rupees tax will be levied. Previously it was 1 lakh rupees tax. Now it is only 85,000 rupees. 15,000 rupees I can save. Apart from that, sir, I have paid children's school fees of 1 lakh rupees per year. So from 8.5 lakhs, that 1 lakh also we can deduct. Some limit is there of education fees, how much we can pay. I'm just saying, for example, how we can, the government has given some norms, some act to reduce the liabilities of taxation. Then suppose if you're having some medical expenses for your elderly parents, that also we can show. And as I told in the previous slide also, suppose you have traveled for foreign trips, some amount of money has been deducted for the, some amount of money also, tax also deducted for foreign trips, and hotel stay we can deduct. So like this, various heads are there. Even some education loan has been taken from the banks. So I am paying education loan. So I am paying interest for the education loan. That is also can be reduced. And I took a housing loan. I am paying per month some amount of money as interest for housing loan. The whole amount of money can be, you can get it from reduced from the tax deduction. Up to like this, we can able to reduce the income taxes by providing an appropriate documents for that. This is the structure of the income tax system. And after that, if you can't able to make any deductions, then the remaining amount will be automatically deducted from the salary, so that the amount will be paid to the Income Tax Office, Government of India. You're clear, students? This is the process of income tax deductions.
Yes, sir.
Yes, sir.
Yes. So that is the reason this we don't, the government is not having any kind of pressure or work or anything. So automatically whatever the money has been given to the staff, and after the deduction of these heads tax deductions, remaining the eligible amount of taxes has been imposed on the taxpayer. Automatically it will be debited and credited to the government account. So it's a very easy process for the government. Easily they are generating so much of revenue from income tax. So that is become the very big amount of share for the sources of revenue from income tax. Then second one is the transfer taxes. So the transfer taxes is the most common form of transfer taxes in the estate tax, or we can also call it as estate duties, such as tax is levied on the taxable portions of the property of a decreased individual, including trust and financial accounts. The taxes levied on trust and some of the financial companies. Mostly the trust will be the political trust or any kind of trust, the individuals or some group of people who created any kind of trust. A gift tax is also another form wherein a certain amount is collected from people who are transferring properties to another individual. For example, I am paying some 1 lakh rupees to the trust. So that is the gift I paid to the one trust. So trust is receiving that 1 lakh rupees. When I am paying that 1 lakh rupees as a free gift or donation to that particular trust, I am getting the tax benefit in the Income Tax Act of 80cc. Under the various schemes are there under 80cc, various subdivisions are there. There I am getting 10% income tax. That means that 1 lakh rupees directly deducted from my income. But when this 1 lakh is received by the trust has to pay the estate duty, or the property or the portion of amount has moved from one individual to the trust. So the trust is liable to pay the taxes. You got it?
Yes, sir.
This is called transfer taxes. Whenever the individuals are transferring their properties or values of resources or in terms of money, they're transferring to the other parties or to the trust in terms of gift or in terms of donation, that will be charged as tax. That is called as transfer taxes. Then third one is entailment tax. This type of entailment tax is a kind of direct taxes, can be collected directly from the taxpayers to the government, and it has been a direct taxes. Why? Because of the people enjoy social programs like Medicare, Medicaid, and Social Security. The labor's staff, they're getting medical care facilities, Medicaid facilities, then Social Security benefits like ESI, PF, and all. The entailment tax is collected through payroll deductions, and it is collectively grouped as a Federal Insurance Contributions Act. So every month, all the individuals who are employed in an organized company, they have to pay some 200 rupees per month as a tax, and the amount of money which has been collected for every individual, whether they are getting 10,000 rupees as salary or 1 lakh rupees from salary, 200 rupees will be deducted, and it has to be directly deducted from the payroll, and it will be paid into the Federal Insurance Contributions Act, because this is entailment taxes is used for collecting a meager amount of money for all the employees for the benefit of the insurance scheme which is provided by various government schemes like Medicare schemes or medical insurance scheme, group insurance scheme, and ESA scheme, Employee State Insurance Corporation Limited, and social security benefits like providing provident fund, pension scheme. For all this purpose, this amount will be used, so that it is called as, it is a direct collection of money from the people. It is called as entailment tax. And the fourth important direct tax collection is property tax. This is also equivalent to a wealth tax, the taxes has been collected on the value of the property, such as the land and buildings. So land revenue or land tax is also a property tax. Wealth tax is also be named as a property tax, and property tax is also a property tax which is being collected directly by the public authorities to the direct taxpayers. And secondly, second important information, these kind of taxes has been collected by the state government. The respective state government will estimate the value of the property, land, buildings, and they will collect the taxes. And it has been used for this collection of property tax has been used for to promote and maintain the public services such as police departments, fire departments, schools, colleges, government schools, government colleges, government college libraries, schools libraries, and the providing infrastructure facilities such as transportation, roads, medical services. These are all the expenses has been made with the help of this property taxes, and it is a direct taxes collected by the state government. Entailment taxes collected by the central government. Transfer taxes has been collected by the central government because it is a kind of income tax, and income tax is collected by the central government. Out of this four, only property tax has been collected by the state government. Up to this clear, students?
Yes, sir.
Okay. Then we have another one more type of direct taxes, the fifth one, capital gain taxes. Up to this, we'll stop today's discussion. Then we'll move on to the next class. So the fifth one is a capital gain tax. This tax is charged when an individual sells their assets such as stocks. As I told, what are the different types of stocks? The shares, bonds, debentures. These are all called as stocks. So when they are selling their assets in the sense not properties, in terms of capital investments, when they sell the stocks or when they are selling the properties in real estate, or when they are selling their companies, they will get some amount of profit based on their acquisition of value and the selling value. The difference will be calculated as a profit or income or capital gain. It is called as capital gain tax. That is the meaning. Then we have to understand what are the intrinsic ideas of this capital gain stock. For that purpose, we'll understand what each and every heads of these stocks. What do you understand by stocks? Everyone, please enable your video. Yes, Gerard, what do you mean by stocks?
Sir, what we acquire a part of, for example, a certain certain goods or parts, etc., of certain countries by paying a certain amount of money.
Okay. Sanjay?
Sir, they are actually shares are actually, I mean, they will change, their prices change according to the market conditions and all. So there will be buying and selling, and through that profits will be made.
Okay, good. Bhavana? What do you understand by stocks? No idea? Bhavana, I am asking you, Bhavana. Bhavana, am I audible?
Yes, sir.
Okay, if you have no idea, no problem. Anyway, we'll discuss because it's a good area for understanding. Shantakumari,
Yes, sir.
yes, you have any idea?
Sir, I think it is the value of the share of some company, sir. Like,
Okay, good, good.
yes.
Okay, please take it from me. Stocks are broadly divided into shares, that is also stocks. Where we'll get the stocks, where we'll get these shares, we'll get from the stock exchange market. Or we can also call it as equity market. So one is shares, that is also be called as equities. And second one is mutual fund. Mutual fund is also a kind of stock. Bonds, we are buying bonds from stock market, or we are also buying stocks from the government or from private companies. It is also a stock. Stock is nothing but when we are investing some amount of money on companies, then we will get some amount of returns from there. In this, we have share market. Share market is controlled by Stock Exchange Board of India, SEBI. Stock Exchange Board of India, SEBI, SEBI. Under the SEBI, in India, we have two big organizations are there. One is National Stock Exchange Board, NSE, and another one is Bombay Stock Exchange Board, BSE. That all you all know, right? NSE and BSE.
Yes, sir.
Yes, sir.
So under the so SEBI is an autonomous body. They are the sole authorship for controlling and regulating this NSE and BSE. Under the NSE and BSE, those who wants to register their names in BSE and NSE, they can get the license from SEBI and they will get the approval of NSE and BSE. They can enroll their company name in NSE and BSE. After when they are enrolling into NSE and BSE, they can publish their company stocks to the public. That is called as issue of public notice or issue of the shares by the companies. Either it may be a government company or it may be a private company. First, they have to get the license from SEBI and they have to register under either NSE or BSE or both. After entering into NSE and BSE, your stocks will be visible to all the public. And when they are introducing your stocks, for example, if I take an example of Tata Consultancy Services, it is a one company. That company, their market, they having some market value of 1 lakh crore. In that 1 lakh crore, 51% majority of the shares they can keep. Out of this 1 lakh crores, 51,000 crores they can keep it. Remaining value of that company, they can sell into the market in terms of per unit share. Suppose I am an individual, when they are posting it, their shares in the share market through NSE and BSE, if I am interested, I feel that the TCS company is good in the market, so that at the cost of ₹1,000 per share, I will buy. I buy even one share also I can buy, even 100 also I can buy. When I'm buying one share and keep it in my name through NSE and BSE, when the market value of the share has increased to ₹1,200, I can sell to ₹1,200. I'll get the margin of ₹200. For that ₹200, what I have to pay to the government? What is the name of the taxation? If I am getting the
Capital gain.
Capital gains. It is not income. It is an income I generated from the investment of my capital. It is already earned income. Already earned income I invested in share market. Because of that, I got ₹200 profit, and I have to liable to pay taxes for the ₹200. It is a capital gain taxes. Like that, we have primary market, we have secondary market in capital, in equity market, stock exchanges. We have mutual fund investments, we have bond shares, debentures. Wherever we are making investment, when we are the difference between the buying cost and the selling cost, if we are remaining, we are getting the profit, then we have to make the capital gain taxes. I hope you are clear.
Yes, sir.
Okay. Okay, up to this, I'll stop here. We'll continue in the next class. Sanjay asked Joel to call me.
Yes, sir. I have asked him.
Yes, sir.
Yes, Joel, can you please call me. I'll talk
Yes,
to
sir.
you. Yeah, I'll talk to you.
Sir, okay, sir. I will call you.
Okay, thank you. Thank you so much. All the best.